Well, hello everybody, Michael Silva here. The Bears, they came and they attacked the Bulls, taking a big bite out of their armor. But do they have it in them to have a follow-through day? Well, we're going to talk about that on today's Stock Market Brief show. So what drew on all of this crazy selling on the very first day of the shortened trading week? Well, Home Depot did report earnings, not nearly as good as people anticipated. As you can see, a big crack to the downside on some large volume. Was it that, or was it potentially the zero-dated options? Everyone's talking about the zero-dated options, and just take a look here, 502,000 puts on these 0 dates were traded. Yeah, like I said, no way in heck these are just retail traders. That is some big boy volume at the 400 that got printed. Now, if you take a look over to the left-hand side of the screen, you can see the volume over here was also pretty darn big. So was it that, or was it, hey, the Fed is going to be holding rates for longer, and now the market is responding to it? Potentially that. The 10-year yield also is coming up to levels that we haven't seen since November. And that puts pressure on growth stocks. Now, there could be a bunch of different narratives, a bunch of different things, but this right here is an indicator that we've been using to identify potential changes in trend, especially when you have the entire market kind of moving with itself. Somebody asked me, how did it work in 2021? 2021, not that great, to be honest. And the reason why is because in 2021, it was still working, but 2021, most of the moves upside was driven by just mega cap stocks, while everything else was breaking down. If you remember that, you'd have to go back to those videos to see what was taking place in the IWM. But we talked about the parabolic start ticking over here on day one, and as you can see, price either has to consolidate or pull back, and it did so doing that. Now, we didn't have much going on overall as far as macro data drops from a major standpoint, but we still had some data drops come out that shook the markets a little bit. Tomorrow, we have FOMC minutes. We'll see if anything new comes from that. We also have Fed Williams talking. And then on Friday, we have some major reports here coming out in an hour before the market opens. Now, the market today, being day one of the week, had a big gap down, and it cracked and closed pretty much at the low. So this is not a positive sign. So this is where the bears would actually really need to step up. But we're going to talk about where bulls might be hiding out. If you take a look here on the NASDAQ on the weekly chart, you can see here we're cracking down through these inside trading candles. So that is not a good sign overall. Remember, the 50-week moving average was declining, and we said to be, cautious about that, especially if it starts cracking, and we just did that. So will we see follow through? You can see here, it cracked that. Now it's getting below that 50-week moving average that was once declining there as well. If we take a look at the daily time frame, you can see there was that bull flag that everyone was talking about. Now it is no longer there, as we've seen a big day to the downside, now adding roughly around 4 days in the S&P 500 of distribution. When it gets up to those 5 or 6 days of distribution where we see, sell-offs on increased volume, that is something to be very mindful of. Now, also to note, the year-to-date anchored VWAP, I don't know why it's white right now. I had it red, but now it's white. We did close below that level. This is something that I was watching intraday. I take a few stabs. We came down and we started moving back up. I thought we were going to get a U-turn on the shorter time frame charts. We did, but then it sold back off. So, I tried and failed there. But this is what we know. When the market starts turning over, you take your foot off the gas, okay? Because when the bears do step up and we have trend days to the downside, you don't want to get completely obliterated. And that is what we saw today, some obliteration in the overall markets. Now, where can we potentially fall to find support? Well, I measured from here to up here, and this right here is the 50% to 61.8% retracement level, that kind of golden zone up here. Break down further into this area, this zone could find potential support. Why? Well, it'd be at the bottom portion of this channel, and it would be around that 50% to 61.8% retracement level. Does that mean that it's going to hold as support? Not necessarily, but that could be a potential area right around 390 to 396, 395, that area to potentially start accumulating if you are bullish. Or you can be like, okay, I'm going to actually wait until price has a closing day back above the year-to-date anchored VWAP. Remember, this is telling us that from a year-to-date standpoint, right, the average buyer, including this entire run, right, the average person based off of time and volume is now underwater. Okay, that is what that's telling us as it stands right now. As you can see, price closed beneath that year-to-date anchored VWAP. The last time we did it was here, and it did not hold down there for long, right? So is it going to be something different this time? Is it going to start curling over? And are we going to see more sell side? Potentially something like that? Or are we going to start recovering and is this going to start turning right back up? it's to be, just a possible potential scenarios that we got to watch for. You can see over here too, this year-to-date anchor, or not year-to-date, the anchored VWAP from the high, right? We got back above this area, and now we're starting to break back down from it. So these are levels that you want to see reclaimed. So to be really bullish, you'd want to see back above this 410 area. To be, somewhat a little bit more safer, you want to be back above that year-to-date anchored VWAP. Now, we did sell off hard, and things are getting oversold tremendously from multiple different perspectives. I'm going to talk more about that on tomorrow's video. I want to just call out day one, we hit the lower weekly expected move right here. I was looking at this wedge intraday to play a little pop. We got a little bounce from it, but then it obviously got faded. And you can see here, this green line is basically showing some confluence of support. So we had the weekly expected move, right? That's the dash line. We have this prior area of support, prior area of resistance, right? Support, and then it broke. Prior support right here too. And now we're right back in this area around the psychological level on the 400. We have the PMO, it's starting to curl itself back up, and we have the RSI showing a positive divergence with a falling wedge structure. So would you be surprised if we see some sort of a bounce up like this? Does that mean you got to get, oh yeah, everything's in the clear? No, if we bounced up to 406, that would be basically a gap fill and a retest of this prior breakdown area, which we discussed, right? If it breaks down there, it opens the door for what? It opens the door for the year-to-date anchored VWAP. We tagged that. Now we had to be tactical, be very careful, because this market, once it gets outside of these weekly expected moves, remember, dynamic hedging could kick in, which forces selling upon selling upon selling, and it could cause more of a gamma squeeze, but to the downside, which we've seen what it does on the upside, right? Lately, we haven't really seen much to the downside, except for obviously today was some consistent sell side activity. If we take a look at the Dow Jones Industrial Average, take a look here. This, remember, expansion leads to contraction. This was looking good, had a nice piercing pattern, but guess what? We gapped down. That's bearish. And then we just closed at the low of the day. Remember, why is this? Well, Home Depot is obviously a big weight in the Dow Jones Industrial Average, and we close at the lows there, and Home Depot looks like it is breaking down. So yeah, can we see a little bit of a reflexive bounce? All I know is this, be careful. This was a big breakdown on big volume, so you want to see the bulls really step back in versus kind of just diving headfirst into something like this. The last chart I want to show is Tesla. Tesla has been on a monster run. Same with NVIDIA, about 100% run from its bottom over here. We remember all this sell side activity down here. Then we got this massive 2023 run. People are calling this, okay, now, that's the bottom. It's over. It's done with. Now we can start this bull market. But we've seen these type of rallies before in Tesla, and they've gotten faded. So we saw this big rally. I'm showing you now we're coming into an area of supply, had the negative divergence. You can see prices kind of waning here, is down 5.25% on the day, but it is still in bullish context on the shorter time frame. As you can see, we're going basically vertical. However, something to note is the MACD is starting to curl itself over, which could be bearish. And then I highlighted down here, this is where a breakaway gap took place, where we gapped up through this. Okay, we rallied, we pulled back, and then we started rallying more. If price wants to come fill this gap, this is also the 50% retracement level, and this is the 61.8% retracement level, measuring from right here, okay, to right here. So if price pulls back into this, that would be that golden zone right in here, right around that 50-day moving average. But, I don't know if it's going to be a solid hit, but this could start turning up longer price action stays above it. But if price comes down into this area, that could present an opportunity for potentially playing long or looking for bounces or so forth. That's all I got for you on today's episode, everybody. Like I said, tomorrow's episode, I'll talk about some of the indicators that are starting to now get into oversold conditions, meaning that we could see some potential bounces. But overall, be very careful here, as the bears did take a big bite out of the bulls' armor today.